broadcast. We're now live from Mark Anielski's kitchen table. It's Ted Ritzer. I'm host of the Greening Government Speaker Series. This speaker series is a collaboration between the Municipal Climate Change Action Center and also the newly created Alberta Climate Change Office, as well as my department, Alberta Environment and Parks. And we're really kind of fortunate. I've been kind of amazed the kind of caliber of speakers that we've been able to get within the Greening Government Speaker Series, particularly when we're not paying them a nickel. They're all doing this through generous hearts and minds, contributing their expertise. And today we're joined by Mark Anielski and Robert McGarvey from Mark Anielski's kitchen table. I quipped before we started that these guys are establishing our new kitchen table broadcast model. And just to give a bit of background on both Mark and Robert, Mark has been a resource economist within Alberta, did some fantastic research on behalf of the Alberta government for about a decade, and I think that research was used to good effect with his book, The Economics of Happiness. Mark has consulted to governments, including the government of China, government of Bhutan. Robert and Mark have worked on genuine wealth indicators. And Robert McGarvey himself is the author of a new book called Futuronomics. Did I get that title right, Robert?
Right, yeah.
And I did read it. I can't say I understood it all, but I understood Mark's a little easier. Yours was a little bit more out of my intellect. But I think what we're faced with here today is an opportunity for you guys to help us on the topic of how does Alberta go about growing its green economy. The two founding goals of the speaker series are, one, through governments within Alberta, doesn't matter what level of government, how can we both reduce our carbon footprint through government operations, but also help grow a green economy. So with that, I will turn it over to our wonderful speakers here, Mark Anielski and Robert McGarvey.
Fantastic. So I'm just going to introduce we're going to have two parts of this conversation. Robert and I are going to have a dialogue. The first part is basically about Alberta's economic opportunities and the assets of this province. And the second piece is about the potential for the Alberta Treasury Branch and our other institution, AIMCO, to be a key driver of this new economic paradigm. And so we want to talk about both of those issues. We're familiar with both subjects. And so the first subject is really the issue that, having worked in the Alberta government and worked with the public sector, the fact that our provinces and our municipal governments don't have proper balance sheets. And I may sound very esoteric, but that's really important, because what we don't have is a proper appreciation of the total suite of assets this province has. Particularly our natural capital assets, including our oil and gas, worth about 8.2 trillion in the ground right now. And things like our carbon liability. I just estimated our carbon liabilities is about $13 billion if you price it at $50 a ton. And so, of course, we're going to edge our carbon tax period. So these are some of the assets and liabilities I think need to be on a proper balance sheet. And then we can look at that balance sheet and say, well, how are we going to invest in those opportunities? Energy efficiency, renewable energy transition. Even as oil is in the toilet, I think there's amazing opportunities. There's low-hanging fruit, and Robert's expertise is in something called intangible assets. Things like relationships and trusts and patents and ideas, which of course are enormous, but don't get a proper accounting in our provincial accounts.
Yeah, and I think it's really important, Mark. Thank you, by the way. The whole issue of the green economy, I think, is central to almost everyone's thinking these days. There isn't an industry or an economist out there who doesn't appreciate that something is changing. And I think what what Mark and I have been working on and diligently looking at is the very foundations of an economy and how those foundations change over time. You're right about Futuronomics. It does deal with the history of capitalism. And there are people who understand that history, but most economists don't. Economics is focused on exchange, not on assets. And so I think the contribution that we can make to change is to put it in some historical context. Change does happen in capitalism all the time. I liken it to phase changes we talk about ice to water to steam. You know, the underlying energy of a system that begins with ice is changing all the time as the temperature rises. But it keeps its physical form of ice until it reaches a critical mass of energy and then changes to water. And then the same happens at the steam threshold. And economies change in very much the same. We are in the end stages of an industrial economy. And yes, things are changing beneath the surface all the time. And it's obvious to just about anyone that intangible assets are now driving more than factories and machinery and equipment. But our system change will not occur until we've reached a critical mass. And so when I look at how can we encourage the development of a green economy, which is really the post-industrial economy, we can continue to build awareness that these economic underlying changes will impact our institutions. And banking will change, government policy making will change, the whole role of accountants and all of the financial reporting that goes on. And actually the structure of business will change enormously as we adapt to intangible assets. So the principal, I think, contribution that we make is that is a normal process. That's not abnormal. If you're sitting there as a government policy economist or a banker, you may be saying, well, it ain't broke, don't fix it. What's wrong? What's new about this new economy? And I think that's something that is of both critical importance and something that we're all going to hope to talk about a little bit more today.
I want to build on that, and having worked for a finance minister under the Klein government, I quickly realized the importance of the way we measure progress. Typically, economists measure progress by a rise in the gross domestic product, but that measure is not a measure of well-being or welfare. It's simply a measure of how much money is changing hands. So we'll expect GDP in Fort McMurray to rise as all the rebuilding takes place, but there was no adjustment in our provincial accounts for some of these regrettable, what we might call regrettable costs or depreciation costs in the environment or society. And so what we've been arguing for is a different kind of budgeting that makes well-being the ultimate bottom line, not only profitability or GDP. Sure, employment and unemployment are important indicators to follow, and unemployment is a real killer of happiness, believe me. But the opportunities to redefine progress and to chart a new course for governments across this country to actually institutionalize what I call well-being-based budgeting is a very exciting opportunity that I think we could pioneer, and that's a good probably segue too to reflecting on Alberta's amazing history. We're a can-do entrepreneurial province. In 1935, when Aberhart was premier, we were bankrupt, and Aberhart reached out to a guy in England, brought him here, and said, "Let's look at what's possible. We're bankrupt. Hey, maybe we can create our own money." And out of that era came the Alberta Treasury Branch, which is still our most, I think, precious financial jewel. And so that's really another interesting opportunity for Alberta and Albertans to now consider and debate openly.
Yeah, which leads, I think, into the conversation about how capitalist economies work and the importance of assets. At the time that you mentioned, when 1930s, when Alberta declared bankruptcy, Premier Aberhart was scandalized by what he called poverty in the midst of plenty. We were had unemployment at record levels. Businesses were shutting down. Farmers were being forced to the bankruptcy. I mean, the whole of the vast wealth of this area stood in contrast to the economic disaster that was going on around them. And I think the actions they took at that time laid the foundation for some of the innovation that we'll be recommending as we go along in this conversation. But the foundation stone of a capitalist economy are its asset foundations. And in my analysis of economics of history of capitalism, we can see those foundations changing from the land-based feudal economy to the trading-based mercantile economy to the factory-based industrial economy, and now to the knowledge-based creative economy. At each stage, there was a process where value was starting to be created in different ways than were traditional. Banks were slow to adapt. Institutions were confounded by all these changes that were going on. But slowly, almost by a natural process, these new sources of value established their own gravity. They established institutional authority that began with a process of describing them through accounting. Now people say, well, what's an asset? Well, the really important assets are those accounting grade assets. And the reason we have double entry bookkeeping, which most people are confounded by, is that there are two levels at which each expenditure in a company is measured. One is what they call the flow side. So we have money coming in, revenues coming in, we're spending, we have expenses, and then we have money going out in profits. And at that level, what we call the flow side level, that's the first entry in double entry. The second entry is what was that expenditure for? Was that expenditure for consumption, or did it build something down here that we can own and from which we can achieve future economic benefit from? In other words, did it build an asset? And as we accumulate those costs on our balance sheet, we strengthen ourselves financially. Banks will recognize those balance sheets, and investors will take security in those assets, and the whole of the capital system opens up to you if you have strengthening balance sheets. And so at each stage historically, when the economy has changed, those new assets were invisible, undocumented, and therefore invisible, and therefore these changes were more slowly adapted to than otherwise. Today we have tremendous technology assets, tremendous invention. We have Alberta alone spends $4 billion a year on R&D, which generates a tremendous amount of intangible technology-based assets. Those are all undocumented. In the United States alone, there's $4 trillion worth of undocumented intangible assets that if you simply recognize them, accounted for their costs through double entry bookkeeping, would strengthen the balance sheets of companies up and down the country. So the historical context is really important here in that it gives you permission to think differently. And I think if you're a banker or if you're a government policymaker and you're looking at the future of Alberta and you want to hasten this transition to a post-industrial economy, that's where you start. You start by identifying the value that we're generating today. You start to treat it formally from an accounting perspective, and you open capital channels to it that allow it to flourish. So that's where Mark comes in. I think that his work on the full kaleidoscope of wealth has been very important in this discussion.
So I guess our point that Robert and I are making is what we're proposing isn't actually revolutionary. It's very conventional. It goes back to 500 years of accounting, which sprung out of Venice in the late 15th century, when Leonardo da Vinci and Luca Pacioli designed a double entry bookkeeping system. And Luca said the whole basis of management is knowing what you have, taking inventory, taking stock, counting your blessings. And the valuation of that in monetary terms was secondary to the physical inventory. So what we're saying is adopting those very principles that these two amazing men contributed, that we still use today and accounts still to use today, can be modernized in the sense of we're going to take an inventory, the true wealth of this province. Now, the interesting part that I learned is the word wealth means the conditions of well-being. I'll repeat that. Wealth means the conditions of well-being, which is a close cousin of the word health. To me, that changes everything. What are the conditions of our assets and the well-being of this province? Now, the other cool thing is that money is a derivative of assets. Banks lend against assets to create credit. What most people don't realize is that 98% of our money is currently created by private banks when they issue loans. Even Mark Carney, who's from Edmonton, now the Bank of England governor, has admitted to the British Parliament that, yes, Martha, it's true. Private banks create the majority of money, not the Bank of Canada or the Bank of England. What does that mean? That means that all the banks in our country are creating all of the liquidity necessary for life, including things like mortgages, which I remind people means a death pledge in French. And so that leads then to the natural question, how is it that ATB Financial, which is a branch of the Treasury of Alberta, backed 100% by our assets, which is 43 billion now in assets, and AIMCO with 93 billion, isn't the most important crown jewel in this country? We're talking about a size, half the size of the Canadian pension plan, with now the capacity, as I just told you, to create as much credit as we need to finance. There's no reason, in my mind, we should be running a $10 billion deficit. No reason at all. And Aberhart understood this. So these are the things that, we're now edging on perhaps revolution, but if I were the finance minister and I was the head of ATB, I'd be sitting down thinking, there are some really creative ways of investing in the new green energy future of this province.
And I think that brings us back to the whole question of institutional change and what needs to change, I think, in order to kickstart the green economy. And one of the key issues we've discussed is recognizing that value is being generated in new ways today, and those ways are much cleaner and greener than the old industrial machines that they're replacing. And secondly, that the assets that underpin those are undocumented and should be recognized. But you raised a very important point, Mark, that money is a derivative of the wealth that resides in our assets. When you go and get a mortgage for your house, new money is created to finance that based upon the inherent value in your house. You go get a car loan, you do the same thing. That you can walk out of a car showroom today in 30 minutes with a brand new car. That because their security for the loan is in the asset. In one case, it's the house. In the other case, it's the automobile. And so the understanding of what our assets are as a province and how those assets could be leveraged, just the way a house is leveraged, just the way a car is leveraged, to create the credit resources we need to do such things as affordable housing. There's no way that taxpayers' money should be spent on affordable housing when that is a conventional asset that is being constructed for social purposes and can be financed by a publicly owned bank. Again, by leveraging the asset that's being constructed. There are a host of opportunities to look at what we call the growth of human and social capital, which are presently undocumented in our society. The whole educational system is a giant human capital machine. Without it, we really would be poor. And so, do we document those human capital assets? Do we understand how they contribute to our well-being? Do we have any method of leveraging those assets? Because they do have monetary consequences. As people gain more and more education, they become more and more of a consuming force in our society. They generate the need for more capital and more money. So I think there's the whole question of how we can begin to meet the challenges of our present circumstances. Begin with understanding that the economy changed, there's new assets out there, and we're very fortunate in Alberta to have a publicly owned bank. This bank literally started out as a branch of the Treasury Department. And people don't understand how important it is. When the first concept of social credit began to emerge, we now think of social credit as a kind of conservative idea. It was incredibly radical in its time, and it was designed to take control of our own credit so that we could support farmers, so we could support small businesses in ways where the traditional Eastern banks were not. And I think nowadays, if we look at ATB and we ask ourselves, well, we have this historical institution. It was generated for this very purpose, to fill in the credit gap that private banks were vacating in the case of the 1930s, or just unable to move into in our present circumstances. If ATB took the lead in identifying and modernizing its systems to advance loans on intangible assets, it would position itself as a leading force for the regeneration of Alberta and the transitioning of our economy from a largely primary economy to a technology-based secondary economy. And I think the potential for ATB is great.
You know, the great thing, I hope you're smiling, Ted, because I hope Albertans appreciate the incredible opportunity we have in front of us and the importance of, it doesn't really matter who's in power. I want Albertans to realize the incredible opportunity we have as we're speaking about this issue. That's not even in the conversational circles I'm involved in. And so while we stew and complain about the impacts of oil prices, we have an opportunity now to establish a proper balance sheet for the province. And also, we're not talking about throwing good money after bad ideas, as we learned in the, when we were suffering in the 90s or the late 80s when oil collapsed, similar to today when Getty took over. We don't have to go to New York to the bond markets and ask them for credit. We can create our own credit, and we can do that in a responsible way. So there's rigorous protocols involved in analyzing the risk potential of businesses that we're going to support. The truth is, as many of us know, 95% of the business world are small and medium-sized businesses. We are the engine of the economy, and yet we get very little attention oftentimes, or we don't get properly resourced or financed. And we think angel investors are out there, they're going to throw good money at our good ideas. But I think what we're arguing is a rigorous way of assessing value and assessing risk, and then moving forward in a responsible and strategic way. We have already some aspirations. We want to get more energy efficient. Well, it's the low-hanging fruit. That means we're going to reduce that $13 billion annual carbon liability. That liability doesn't appear in anyone's books, not Suncor's, not the Alberta government's. And so we can justify then shutting in coal by saying, that $13 billion liability is going to go down. And we can get energy efficiency retrofits in our homes. Can you imagine the people employed? There was somebody on my doorstep yesterday offering a carbon audit of my house. If I let her in the basement, she would have said, get rid of that furnace. And so I'm thinking, heck, that's a great business, right? And where's the financing going to come for it? For that choice that I would make as a homeowner. But the point is, opportunities galore. And so there's no need to think about running deficits. So I think that's an important message to Albertans. As Robert points out, the ATB is a public bank, the largest public bank in North America, larger than the bank in North Dakota that some people point to. And we have an amazing number of Albertans who hold accounts for deposits. I'm not saying everyone should move their money to the ATB, but why wouldn't you? It's our bank.
Well, I guess I'll interject with a question of you guys, and maybe you can help everyone understand the financial crisis that took place in the U.S. in approximately 2008, where basically the private banks failed. And my understanding is the U.S. government stepped in with several, trillions of dollars to essentially bail out Wall Street. And a lot of Americans lost their houses. So how does the U.S. banking system, in contrast to what I think you guys are saying is a strategic opportunity for Alberta to consider right now with North America's largest public bank?
Well, it's really important to realize that as we talked about assets and leverage, that some people have access to more leverage than others. And if you're a family with that's renting and has no assets, it's very difficult for you to raise any capital to do something, send your kids to school or what have you. If you have a home or stock portfolio or some other kinds of assets, you can leverage those assets to pay medical bills, to send your children to school, to start new businesses. But there's a portion of our economy that has access to what we call compound leverage. And fractional reserve is one of those areas of the economy where a bank, for instance, one of the great myths in banking is that in the capitalism is that banks lend depositors money to borrowers, and they make money by charging higher interest than they're paying to the borrowers to use their money. The reality is that banks have deposits, they do make loans, but no depositor's money is ever compromised. No deposit account that you own or I own is ever compromised to lend to anyone else. What happens is the deposits and other equity in a bank create a capital base for the bank. And that capital base for the bank then creates a phantom or derivative credit facility. So if I have $1 million in equity in a bank, I can create somewhere between $20 and $30 million worth of potential credit. Now, when somebody walks in with a business opportunity and I access that credit, I'm creating money that did not exist. And I'm lending it to a business owner secured against his factories and machinery and equipment, probably. That's how they generally do commercial loans. And so when the loan is paid off, the bank now has that capital, which it puts into its capital base. Didn't have it before, has it now. And as it expands that, it expands its fractional reserve capability, and it's an exponential growth curve. And so the way banks work is all about generating that fractional reserve. Now, what happened in Wall Street was that investment banks and people who operate in the derivative economy started to fractional reserve their holdings. So if you were Goldman Sachs or Morgan Stanley or Lehman Brothers, you would be using what they call the repo market to compound your existing assets to create a fractional credit universe that was lending for. You might have remembered that prior to 2008, there was leveraged buyouts. Debt was replacing equity in buying up companies and restructuring them and all that kind of thing. Where did that debt come from? It came from the investment bank's leverage capability, the fractional reserve capability that they were employing through the repo market. Now, the problem with that is that there is no restrictions on Wall Street the way they are on chartered commercial banks in Canada. Your ratios have to be very carefully monitored. The kinds of loans you make are open to all kinds of different criteria. At the leading edge of Wall Street, they were going into territory which they should never have gone into. Couple that with an almost criminal debasement of the subprime mortgage market, and you had the conditions for failure. Those conditions, although we bailed out the banks, we have not actually dealt with those underlying regulatory conditions on Wall Street. And Mark and I both agree that it's not if, it's when there is another financial crisis, because the conditions in Wall Street are very much the same as they were. And so what brings us back to Alberta, if I may, is that, yeah, we are probably facing not only an oil crisis, which as we climb out of slowly, we are likely to get hit again at a different level by this investment banking, sort of storm cloud on the horizon. So I think the quicker we can gain control of our own credit destiny, the quicker we can transition to and elevate ATB, because it already exists. We don't have to invent it. If we can repurpose it to public purpose and start to relieve the government and the taxpayer from some expenses that they are building assets, and we ought to be generating our own credit to pay for them. We don't need to be reaching the taxpayers' pockets to do that. The sooner we transition to that point, the better insulated we'll be when these storms arise in future.
I think what's remarkable, Ted, there's a teaching moment here. Robert and I have studied the history of money going back to Samaria and Mesopotamia, and we have to go back to the Revolution in the United States and Benjamin Franklin and Jefferson. Benjamin Franklin knew that money could be created against the productivity of the land in Philadelphia. And so the entire American Revolution was actually about decoupling from the banks in Europe and gaining their own financial sovereignty. And the Federal Reserve, unfortunately, which was established in 1913, is actually a privately held bank. It's not a public bank. And so Ben Franklin, I think, would be smiling, going, "You guys in Alberta, you did what we tried to do in Philadelphia." And so I think we have a responsibility. In England, for 800 years, they had something called a tally stick. So from William the Conqueror, to beyond the Bank of England's foundation, which was a private bank as well. We had the British had this thing called a tally stick, which was the most stable period, I think, in the economic history of Britain, in which the stick was issued by the king as a basis of paying taxes and paying for goods and services. Very finely calibrated, just enough to have the economy function well. It was a stable economic period. There were no climbing in unpayable debts that amounted. And it was only with William of Orange, who came from Amsterdam, who said, well, I'm going to debt finance the war effort in Britain. And then they got caught in that trap. So again, we just have to go back in history, pick up some of those pieces and say, what would we do today, given what we see as an intractable crisis where debt cannot be repaid? That's the other truth. It's impossible to repay the amount of debt that keeps compounding and requires more economic growth just to pay the interest on the debt.
Yeah, we are reaching the end of that cycle as well.
I'll give you one statistic which shocks people. I've estimated 36 cents on every dollar that Americans spend today is embedded interest costs. Embedded, hidden. That means a third of our working life will be spent wasted paying for interests that are unnecessary if you had a central public bank that created the money as a public utility.
Well, I have one question for you guys, and it's based on, and I'll just outline, there's a Swedish politician that's consulting to the UN. His name is Anders Wickman. And what he feels that governments should do globally to grow a green economy is tax what you want to discourage and don't tax what you want to encourage. What do you think of that idea?
Well, that's a negative incentive. And I think, using the tax to discourage certain kinds of behavior is something that's readily available to governments. And I think it's what they think of first. There's very few levers they have really to impact behavior. But we would recommend positive incentives. Create the conditions so that capital will readily flow into those areas of the economy that you want to develop. And to me, if we started to identify the green technology assets and we used our bank to capitalize those companies and to drive them to successful businesses that create economies of scale and then transition the economy through that vehicle, I think we would both create the new economy. It's less politically risky, let me put it that way, than starting to throw taxes around. And it's a positive incentive. And I think the tools, the government doesn't understand that it has the tools. It is, this is one thing that Abraham Lincoln discovered when he was fighting the Civil War in the United States, that as soon as the war broke out, of course, he had faced with a massive fiscal deficit, and yet he had to fight one of the greatest wars ever fought. How do you finance that? So he went to New York, and the banks there said, "Fine, we'll lend you all the money you want."
60%.
Yeah. So he went back to Washington, and he asked the obvious question. If we don't, how are we going to finance this war? We'll go broke if we borrow the money. Then he did some digging, and he realized that it is the right and authority of government to create money. So he went to his Treasury Secretary Chase, and he said, Treasury Secretary Chase, I want you to institute a new policy. We're going to create a new greenback dollar. That dollar is going to be generated in the Treasury, and it's going to pay for the soldiers in the field.
Well, I got to say that this is going right back to Aberhart and the Alberta buck, or whatever it was called.
Yeah.
So I mean, it sounds radical and revolutionary, but you say Abraham Lincoln and then Aberhart and how many others. So what else do you guys recommend for governments in Alberta to consider to help grow the Alberta green economy?
Go do what Aberhart did and invent a new currency. You don't need to invent a new currency when we have a perfectly good Canadian dollar.
Get a bulletproof vest.
You're going to take some heat. But I think you understand what's changing in the economy and how, if we can accelerate that transition, the green economy will be a consequence of that. We're at that water to steam threshold in our economic life, and we're starting to bubble a little bit on the surface of the water. And as the energy, if we can increase the energy, we'll transition to this new phase of our economic existence more rapidly. And I think that's gonna solve a lot of our problems around carbon, because the carbon economy is the industrial economy. And the sooner we can transition out of that, the more completely we'll eliminate that as a problem.
Oh, that's excellent, you guys. Are we at a stage now within your presentation to open it up to the folks for questions?
Absolutely.
Sure.
So just for our webinar participants, there is an online Q&A function, and all you have to do is kind of hover it and click on the Q&A function. And so we're now open for questions. If there's anybody who wants to ask Mark or Robert any questions on what they've just presented. It's very quiet on the Q&A front here, guys. So maybe we'll continue this conversation on this whole thing of.
So let's.
No, here we go. Okay, here's one here. What could be done to make it easier for ATB to support green business?
Well, that's an interesting question. I think that is the core of it. Right now, ATB, if you were to dive into its lending protocols, and of course, if you're a green business and you walk into ATB these days, you're going to have probably you're going to have a business plan, you're going to have the technology maybe, but your balance sheet will be empty. There will be no capitalized tangible or intangible assets on your balance sheet. And so when the bankers look at even ATB looks at it, they say, well, there's nothing we can take as security for the principal of our loan. So then we can really only loan and lend money to you if you have sufficient revenues and earnings to support both the principal of the loan and the interest. So it's very difficult for a new technology company, a green technology company, to talk to a banker unless they're at that stage where they don't need a banker. And so one of the things that we've been doing is working with small technology-based companies. So I can tell you about one in Calgary that we did. They were looking for private equity. They thought they needed $3 million to grow their business. Again, we looked at their balance sheet, and of course they had an empty balance sheet. So we went in and identified and capitalized their intangibles, and they had software and carbon credit assets. Once we were done, we restated the financial statements for this organization for those 3 years previously, and walked them straight back into the bank that had turned them down for a loan, and they got a loan.
By the way, the accounts were validated by a big, accounting firm.
Yes.
So accountants today don't. I was brought up, I was trained in accounting, articled with Coopers and Lybrand, and none of the things we're talking about did I understand at the time. Things like goodwill, an intangible asset, yet you can't say that goodwill is only 10% of your balance sheet, because business today is about relationships and trust.
Yeah.
And so I don't care whether you're trading carbon or you're a farmer, you're Ducks Unlimited. These assets need to be properly accounted for and posted. Not necessarily in the audited financial statements, but certainly in the management accounts of companies. And then you can take it to the bank, and the bank will say, oh, yes, we do recognize the value, and this is actually in line with general accepted accounting principles. So this is what ATB could do.
Yeah.
Right?
Well, okay. And on that note, here's the question number 2. We have R&D firms that invest in new clean tech. Are you saying ATB could help with Alberta Innovates and the ERA, previously Climate Change Emissions Management Corporation, on technologies that are ready to move to commercialization?
Absolutely. And I think there's really 2 things that need to change before that's going to be the standard operating procedure. One, I think the R&D companies, either inside the institutions, university, or the companies that are formed subsequently, have to realize that the research is one thing. The development costs associated with technology and the ultimate products that are produced are not only a technology, they're an asset. And in building that asset and understanding what that means to your balance sheet is of critical importance. The other side of the coin is we have to instruct ATB or encourage ATB to understand the technology economy a little better, because their protocols are all industrial. As you say, if you want property to be leveraged in a bank, easy. If you've got a factory, equipment, machinery, any of those traditional assets, they have protocols which they can employ to value and do risk assessment and create the conditions for a loan. But we really need ATB to start looking into the new economy and understanding that it's underpinned by intangibles, and start to build some protocols around those new assets, so that when a technology company walks in with an intangible, they have the matching protocols that will open the lending door.
And here's another remarkable aha that people maybe don't appreciate. A public bank or a credit union actually has a potentially competitive advantage over conventional private banks. Why? Because we don't have the primacy of shareholder expectation. We simply have to recover our operating costs. In other words, you can, in theory, charge no interest at all on loans, but you need to recover your operating costs. Now, there is a bank in Sweden that operates this way. And I studied that bank, went to Stockholm. I showed it to the CFO of Van City, and they were interested. But the point is, here we have service, we have ATB, we have a credit union and our own public bank, and we could actually provide low to zero interest loans for some of these key strategic investments you're talking about.
Okay, well, question number 3, and I think this is the core question that's being asked, is how can we incentivize renewable electricity production?
Well, that's a very interesting question, because I think right now there is a strong bias towards the big battalions, the generation of on a massive scale, involving massive transport infrastructure and distribution infrastructure, and because of the huge capital costs that society has borne in building this infrastructure, we give a priority to that electricity in the grid, and we can accept alternative sources in the grid, but only where there is a deficit that we can fill. But we give the priority to the traditional. Well, if we reverse the priorities, allowed the grid to fill with renewable, and just supplemented it with the traditional, then you would have the conditions for a massive transition in electrical generation.
So here's what I would do, Ted. I'm a full cost accountant, so I would put every energy capacity option on the table in a full disclosure, a full counting of the capital costs, the carbon liability, the health benefits or costs associated with, I don't care if it's PV or coal-fired. I mean, estimates now are shutting in our coal-fired electricity could be between $4 to $5 billion cost to transition to natural gas. What about the energy efficiency opportunities?
Mm-hmm. So you would look at all technical options and then evaluate that, all of them.
Full cost accounting. Full depreciation on the coal facility. No one should suffer here. I'm not saying that the coal, electricity companies should suffer, but there should be a transition strategy that says, if we increase our photovoltaic capacity, which you may know is less than 0.5% of electrical capacity today, then if we increased it to Germany's, what kind of capitalization would be necessary? And is the return period going to be 15 years on my house, or is it going to be 9 years or 10 years? Because if it's 10 years, it's more attractive. And then I can actually turn my own business into a public utility for my house. Think about that. I don't need NMAX.
Mm-hmm.
Right?
But here's the next question. With the extremely short time frame we have to address climate change, do you think positive incentives without negative incentives, in brackets carbon tax, can change behavior fast enough to lower emissions, etc.?
I can tell you this, Ted. If I had a $10,000 interest-free line of credit from ATB right now to put a solar array on my roof to cover half the current consumption, I know who to call right now. Randall, come over, do an estimate. Will you install next week? It's done. Reverse metering, it's done. Money will move, but every neighbor, I don't know if you've been to Germany, Austria, where my cousins are from, every third house has solar panels on the roof. And I'm not saying we should follow Germany's path, but how did they accelerate so quickly in 10 years? Mm-hmm. And we have more sunshine hours in Hamburg. Like, come on. So we can incentivize this through the traditional financial tools. We don't have to use a carbon tax to a sin tax, to, a negative tax to move behavior.
Mm-hmm. So next question here, you mentioned economies of scale. How do small and medium businesses generate enough scale to be both profitable and competitive?
Well, I think economies and businesses are like athletes. They need the oxygen in order to reach their full potential. It's lack of capital and the length of time it takes to acquire capital, and the strings that come attached with capital today for a technology company would make it almost impossible to develop in Canada. Most technologies today limp along. Maybe they go to BDC, or they gain a little bit of a proof in the marketplace, and then they're sold to the U.S. And it comes down to our capital structure. If we could fully oxygenate the environment for them and treat them like the athletes they are, and give them create the biosphere, which creates all the additional resources they need, including marketing and branding and the commercial expertise necessary to take them to market, then you're going to see some remarkable accomplishments here. And to be honest, the whole history of technology illustrates this. You may remember a little company called Sony. When they started, they were back in the 50s. They were a tiny company in an occupied part of the post-war world. They were so far from the market that nobody gave them a chance to do anything. But they had commercial genius, which played a big part in their development. But they also had access to development funding from the Japanese government, who wanted to transition from its traditional economy to a technology economy. They provided the oxygenated atmosphere for Sony to do everything it wanted, all its research, all its marketing, all its economic growth. And so if you starve your companies like we do in Canada, then you're not going to get world-class athletes. And that's what we're doing to our businesses. We have a kind of starvation mentality, and that creates its own consequences.
But I want to take it back to pragmatic as a small business owner. Again, I've done the math. If I invest some of my retained earnings into solar array on my roof, I know how to justify that with my wife, who is a shareholder, right? Mm-hmm. I know how to write it off. If it's a 10-year payback period and I get to actually bank the carbon liability reduction and account for that to the province, wonderful. But I've personally made that commitment, right, to move in that direction. So that's something that all business people can do. Mm-hmm. And a lot of us have home business, so we can make those small decisions and achieve, the aspirations of reducing our liability.
Yeah. Well, this next question, and I will preface the question, and you guys will understand why before I repeat it, is, we looked at this presentation that you guys were going to deliver as strategic to Alberta and Albertans, and particularly to our ministry. So we did have it kind of pre-vetted for approval to deliver prior to this delivery. So you'll understand why when I repeat this next question. Who is speaking to ATB or the finance minister about these issues and opportunities? And I certainly can't answer that question.
Well, I can tell you, Robert and I, 3.5 years ago, on the 75th anniversary of ATB, asked for a meeting with Mr. Mowat to say, we have a lot to celebrate. The real story of ATB hasn't really been told, or Albertans have forgotten how it all started. So we did make attempts to present our ideas to ATB directly 3.5 years ago. Now, of course, with a new government, my hope is that that the finance minister and caucus will go, why not? Let's have a forum. I'm not saying let's listen to Robert and Mark. Maybe some people think we're out, way out in left field, but let's have a forum. Let's have a discussion about, some people are talking about a green public bank. So why start a new bank? We have ATB. Why don't we have an open forum across the province to say, what could we do differently?
Yeah, I think the part of the answer is need. And when we were talking 3 years ago, the Alberta economy was booming, and it was that the future of the Alberta economy was very clear. It was going to be energy and carbon development. We were not that we weren't heard. It's that the momentum of the economy was very clear. Today, I think there is a greater willingness to look at alternative solutions, and I think given the work we've done in terms of understanding how the economy is changing, how that is impacting Alberta, it's very, very relevant to the government. It's relevant to the ministries. It's relevant to all of the major institutions in our economy, and for the very first time in a long time, I think they are open to new ideas.
Mm-hmm. And believe me, Ted, this was, so we were aspiring to this conversation when Prentice was in power. And so we're apolitical in that sense. We think that this is just an enlightened wisdom government. I don't care who the premier is or the finance minister, but the opportunities here are just golden for anybody who's in power.
Well, and like you have made the point, this is a strategic asset that's exceptional within North America.
Yes.
No other jurisdictions have this tool in the toolkit.
That's right.
Yeah. So I guess what I would do now is give you guys a couple of minutes to close off with any parting comments. I don't see any more questions. So what would those parting thoughts be from both you guys?
One of the questions that Robert and I played with is, pretend that Robert is the finance minister and he's also, or he's the head of ATB. Robert, what would you do next week, given the conversation we've just had, if you're the finance minister of this province?
Well, I think what I would do if I was in the position of the finance minister would be to start to be a little more bold about the future. I think there's a tendency of governments to want to keep a steady hand on the tiller and be seen to be prudent managers of the economy. And I think that's in a transition economy, that's a very risky position. That's the highest risk position, to be honest, because the future is different than the past. And I think understanding the future, understanding where value is being created in our economy today, and starting to look at how the government can play a role of catalyst in connecting capital to those sectors of the economy that are our future, is where a finance minister in particular is going to get his revenues for the government. So I think that's where I would go. If I was the head of ATB, I would sit down with the government and talk about how we could utilize this public utility for the public good. There are enormous numbers of opportunities where assets are being generated. And we talked a little earlier about affordable housing. There's no reason we should be putting taxpayers' money into affordable housing when that is a traditional construction loan. If the ATB were instructed to deal with the special circumstances of affordable housing and finance those loans with special conditions, because there is a social asset being created there that is both political and economic in nature, then I think if I was the head of ATB, I would be having those conversations with the government to find out how I can utilize this public utility to the greatest public good.
And if I were to grab the mic now, I would say that if I was the finance minister, I'd be asking my advisors to provide a preliminary assessment of the assets of this province.
Now let's get a balance sheet.
A balance sheet, a proper physical inventory of all our assets, and evaluation. And we could have that confirmed by Deloitte or PwC or Mark, if you like. And I would ask the same of ATB. ATB should know who are the small businesses in this province. What is their financial fitness, resilience, right? What are those unvalued assets that aren't showing up in their business plans that could be? And then you put the two together, you got balance sheet for the province, you got balance sheets for companies, and you've got a recipe for a great, sustainable, well-being economy.
Well, you guys, you didn't disappoint, at least for what I think you've provided, what I would phrase as a made in Alberta financial option for the province to consider to help finance and grow a green economy. And it's been a fascinating presentation, and it will be really interesting to hear the feedback. We will be posting this presentation to our partner's YouTube channel, so there will be some residual uses of this presentation. But thanks so much for doing this. This has been wonderful.
Thanks, Ted.
Thank you, Ted.
Thanks for making it available from your cubicle in the government of Alberta.
Absolutely. With our very first kitchen table broadcast model.
There you go.
Excellent. Thanks so much.
Thanks a lot.
Okay, take care.